Hey guys, Brian Stevens here with the National Real Estate Post. I want to let you know that Carl White and the Marketing Animals have a gig that they're putting together to help you out with your 2022 goals. Here's the idea. Let's learn how to work smarter, more efficiently, make more money, and maybe even cut our hours in the process. It's a great gig. You guys definitely want to check this out. All you have to do is click this banner right over there. By the way, I want to say a happy birthday to Deborah Lentow, Abby Cotton, and Greg Wright. Happy birthday to all three of you. Now, I see it falls on a Friday, so you can get an early jump on your weekend. So knock it down, knock some back, and if you stay up too late, knock some over too. But on with our show, did you know that the average income, according to Fred, and that's the St. Louis Federal Reserve Board, the average income for a person is $35,805. Now, that number really, if you think about it, makes no sense. If the average income is less than $36,000 in this country, then how is the cost of the average house $361,171, which is a year-over-year rise of 14.6%. Here's what the whole thing tells me, is that the average person ain't buying the average house right now. Now, stick with me because we're going somewhere with this. Active listings fell 26.1% to an all-time low. That's big. And we're down 44.8% from 2019. That's big too. The share of homes that went under contract that had an accepted offer within the first 2 weeks on the market was 40.3%, and that's above the 35% rate of last year. Also a big number here, guys. So what does this tell us? Well, the average person isn't buying the average house, and that's not going to change anytime soon with these numbers. So what do we do? Well, if the average person isn't buying a house, I guess that means we need to go out there and find somebody who's an above average person. So how do we do that? Well, it's not as hard as you might think. If the average person makes $35,805, well, according to payscale.com, the average self-employed person makes $61,000 per year, nearly twice as much as the average person. So if you're having a hard time with your current database, then go find some self-employed people, because chances are they just make more money, and that's good when you want to buy a house, especially in these markets. Well, how do we do it? Simple. All we want to do is go buy a scrubbed list that includes addresses, emails, and cell phone information. Sure, it's going to cost you money, but isn't that the whole point? Think about it for a second, guys. If the cost wasn't a barrier for most realtors to get these lists, then every realtor and every lender would be calling all the self-employed people on all the same lists and just beat the list in the ground, and nothing would get accomplished. In fact, you want your leads to cost, because that means you're probably the only one who's willing to pony up the money and actually make this thing work. Also, did you know a report released Thursday from Adam Data Solutions found that owning a medium-priced home was more affordable than the average rent on a 3-bedroom property, and 58% of the 1,154 U.S. cities analyzed using data from the U.S. Department of Housing and Urban Development, HUD, and the Bureau of Labor and Statistics. See, this, my friends, is a great icebreaker talking point for all of those unsuspecting home-buying suitors of yours, especially those, that's right, that are self-employed. Now, here's the thing. When you get these self-employed people, use Oaktree's bank statement loan for your new database. All you need is 12 months, not 24 months on your bank statements. It's got a 40-year option with a 10-year interest-only period with remarkably competitive rates. And at Oaktree, as long as your rate is at par or greater, they're paying 1 point back right now on non-agency and investor advantage loans. And don't forget that all of this marketing, it always works better with a partner. Realtors and lenders get together, offset your costs, because lenders and realtors, 50-50, the same lead, the same opportunity, because there's not just buyers in these lists, there's also listing leads in these lists as well. And side note, these historically kind of upsetting numbers with housing right now, well, it's going to change and it's going to pick up. I think this year in particular, folks were thinking more about family with the holidays and not so much about moving into a new house. See, I'm telling you right now, the interest in real estate moving and borrowing other people's money that you as a loan officer can facilitate is going to start to pick up, and pick up really soon. So make sure you get in front of this with your marketing. It will pay dividends for the rest of the year. Finally, Finally, and this I find actually super, super funny, but at my heart, I'm probably a little bit of an anarchist. Did you know that according to Inman, NAR, the National Association of Realtors, was the second biggest contributor to seditious caucuses in the country? I love that term, seditious caucus. It should be the name of a punk band. Now, despite saying that it had paused all federal political donations after the January 6th insurrection attack on the U.S. Capitol a year ago, the National Association of Realtors was the second biggest donor among trade groups to the campaigns of lawmakers who voted against certifying the 2020 election results. And this is according to a report for Citizens for Responsibility and Ethics in Washington. That's kind of funny right there, isn't it? Now here's my point. What if NAR or your state association has a political position that you just simply disagree with? Don't get me wrong, I love the term seditious caucuses. I want to donate to that. I think it's funny. But if you disagree with their stance, how do you feel about part of your dues going to a political position that is out of step with what your values are? Are you okay with this? Because it seems to me that NAR should be spending their time, their energy, and their money working to protect agents from the now never-ending cycle of fast and loose real estate alternatives like iBuying companies. So let me know what you think in the comments, my friends, down below.